What is a healthy profit margin for an online service-based business? That's the question we're answering today on the Profit Pillar Show. I'm Parker Stevenson, your host. I'm CEO of the accounting firm Evolve Finance and the author of the book Profit Pillars. And I wanted to make this episode sort of as a follow-up from the previous episode where we talked about what's a healthy profit margin for a digital creator or online business, because those businesses tend to sell digital products, and digital products can be broad. It could be an actual course, or it could be more of like a group coaching business or a membership community, or it could be sponsorships and royalties from a more influencer model. But with a service-based business, your offer or your product is your team. It's the people doing the actual work. Your offer is somebody doing work for somebody else. Now, Evolve Finance is a perfect example of an online service business. And this kind of leads me to, well, what is an online service business and how does it differ from maybe a more classic service business? Evolve Finance is a perfect example. We operate remotely. Our whole team across the country operates remotely. All of our clients are found online. We deliver the service through all of our computers. We have no physical office space. So we are what I would call maybe a more established online service-based business. And a lot of our clients that have online service-based businesses, a lot of the time are offering marketing services, consulting services of any sort. It could be a podcast tour agency. It could be a paid traffic ad agency. It could be a virtual assistant agency. You know, there's a variety of different things that you can do. We even have clients that have maybe therapy practices, maybe a solo practice, or maybe it's hybrid where they do have some physical office spaces, but their teams, but they still have a remote team and are serving people around the country. So really, I look at an online service business that either can operate fully online or at the very least has very minimal physical space. We're not talking about like plumbers or electricians or landscapers or something like that, but really businesses that primarily exist on the internet. And so these types of businesses do have different profit margin expectations than a more classic online or modern small business would have. And so I wanted to make sure that I don't forget about my service-based business people out there, because again, I run a service-based business. I have a soft spot for people that are building businesses where it's human beings serving other human beings. It's a lot of work to build a business like this, but it's so satisfying, it's so fulfilling, and it can be so worthwhile. But there are different expectations here. So how profitable should a business like this be? 20% profit margin is what we're looking for. With our other online business clients, we're looking at 30%. If you listen to the previous episode, we talk about that. It's 30% or better. With a service business, it's more like 20% or better. So why is the profit margin for a service business? Why do we have lower profit expectations for a business like that than an online business not delivering a service? Well, the simple answer here is service businesses are just more expensive to run because, for instance, if you're selling a course or you have a group coaching business, you can sell a lot of customers into your offer, but you don't really have, your labor expenses don't follow along per se. Versus a service business, if you want to serve more clients, you either need to give your team more hours, maybe some of them are part-time, maybe you need to give them more hours and they're going to be full-time, or you're going to need to hire new people to serve those customers, right? Like at Evolve Finance, if we got a massive influx of bookkeeping and tax clients and it puts our team at capacity, we're going to have to hire more people in order to serve more clients. Versus if I was just selling a course on bookkeeping, I could sell 2,000 units of that course and may not even have to hire another person to help with that. So that's the big difference there. And so team costs tend to be a lot more expensive for service-based businesses because you need the team available to serve the clients with what you want to serve them with. Now, I think it's important to understand that if you have a service business, but you are the only service provider, then we're going to have different expectations, right? So what should your profit margins be if you are the only person providing the service? So this can be super common for consultants or freelancers, coaches that do one-on-one work and don't have any other coaches working with them, right? These types of scenarios where you are delivering a service, marketing services, coaching services, financial services, but you're the only person doing the service-based work, I'm going to expect your profit margins to be much higher than 20%. It wouldn't surprise me if your profit margins were well over 50%, because a service-based business like this, you're not having to do volume. You're kind of selling in one customer, one client at a time, and doing the work for them is super profitable because you're the one doing the work. So sure, maybe you have an assistant, maybe you have some other expenses, but you could do 80% profit margin if you keep the rest of your expenses really low and you have a really nice organic lead generation system in place. Maybe it's referrals or SEO or whatever it is. You can stay way more profitable. So I just kind of want to say that up front. The 20% or better profit margin comes into play once you start to hire team members to do the work that you used to do for your clients, but now you have team members that you've hired, you've trained to now do that work for your clients for you. That's when costs tend to go up quite a bit more, and that's where the profit margins tend to look a little different. Now, our online, or not necessarily online, but are service-based businesses worth more? Yes, because service-based businesses can be built up to where they don't rely so much on the owner of the business to market and sell and operate the business, versus a lot of personal brand-based businesses, education-based businesses. It usually revolves around the business owner's expertise. And so those businesses don't sell for very much, or they may not even sell at all, versus service-based businesses. We are giving up some of the massive profit margin that other online businesses might have, but we're also trading that for a business that tends to be more stable and also tends to be more sellable when you decide, I don't want to do this anymore. Now, your business will be more valuable. This is how I should say it. Your business will be more valuable to another party to purchase it from you if it's grown to a size that the service doesn't rely on you to deliver it. It will be worth way more, but your profit margins will be lower. Versus in the early stages where your profit margins are really high, sure, the margins look really good, but that's because you're doing all the work. So the business will be worth less or won't be quite as sellable, but your margins are really high. So you do have to make a decision at some point to go, do I want to scale beyond myself? Do I want to build out a team to serve the clients the way I have historically served the clients? And am I willing to give up some profit margin in order to do that? We had to make that exact decision at Evolve Finance, and we're glad we did, but it's not for everybody. But that's kind of the difference here between a more classic online business and a service-based business or an online service-based business. This is a bit more the game we're trying to play. We're balancing profitability with scalability in a way that online businesses don't really have to balance it to the same extent. So just like with a more classic online business, to track profitability, like how do you do that? Bookkeeping. We talked about it in the last episode, but I'll recap in case you didn't listen to the last episode. Ultimately, you need bookkeeping. And I think it's so crucial for service-based businesses because the cost of managing your team and doing all that, that can grow really fast. So if you don't have good financial visibility, if you don't have a profit and loss statement that's being generated every month, and you have good bookkeeping so you can trust that data is accurate, it's going to be tough to make good financial decisions. And so to track your profitability, you need to look at a profit and loss statement every month. And to generate that profit and loss statement, someone needs to be doing the bookkeeping. As I've talked about in other episodes, if your business is small, you're not ready to hire a bookkeeper, I recommend you use a spreadsheet, and we sell a bookkeeping spreadsheet on our website at evolvefinance.com. Go check it out under the Learn tab. And it's very affordable tutorial, how to use it, all that good stuff. Because in the early stages, if you only have a few transactions going through your business every month, then doing it in a spreadsheet is totally fine. But as your business grows, it starts to become your full-time income or a significant part-time income for you, then it's like, let's get a bookkeeper involved, because especially for service-based businesses, planning ahead becomes a lot more important, especially with what we just talked about, where you're like, okay, I'm delivering the service, my profit margins are really high, but now I want to transition to hiring people to deliver the service, but now my profit margins are going to go much lower. What do the numbers look like? How do I map that out? And the easiest way to map that out is to have historical data from your bookkeeping and use that to do a forecast and budget and model out what is that transition going to look like. And that was something Corey and I had to do. In the early days of Evolve Finance, Corey and I were serving all of our clients with a couple of other bookkeepers. One of them is Susan, who's still with us today, 12 years later from when I recorded this podcast. I've been here 11. Susan's been 12. So she's been here longer than me. And it was just the four of us, and we were all serving the clients together. And eventually Corey and I went, hey, if we want to grow, Corey and I can't be the only ones serving the clients anymore. We got to be able to hire more bookkeepers and more account managers and figure it out. The only way we were able to make that decision was through the numbers. And obviously we're an accounting firm, so we had great bookkeeping, and we used that data to model out what we wanted the future to look like. So I think it's especially important to manage your labor costs, which we're going to talk about more in just a second here. It's so important you have financial data you can trust and you can utilize to make big decisions around how you want to grow and scale your firm. Now, which expenses have the biggest impact on service businesses? I'm going to go through the profit pillars a little differently than I did in the previous episode. But when we look at the profit pillars in a business, and again, Profit Pillars, the book, we talk about the profit pillars, a whole lot in that book. But there's 4 profit pillars. The first one's going to be lead and conversion expenses. The second profit pillar is your offer delivery expenses. The third pillar is your labor expenses. The fourth one is your operating expenses. And so with a service-based business, what I've seen historically is the first pillar, lead and conversion expenses, tends to be really low, because for a service-based business, you can't really do a ton of volume. You can't just take on 20 clients in 1 month or 100 clients in 1 month like a course-based business or a membership site can, where it's like, heck, we could bring on 1,000 people in 1 month. It's all automated. We don't need the team members to do a whole lot. But when you're running a service business, you can only onboard so many clients at one time. So marketing tends to be more organic. It tends to be a lower cost in a service-based business. So you don't typically have to worry about lead and conversion expenses too much unless you're doing a high volume service-based business, which is going to usually be a multi-7-figure or 8-figure business. And you're kind of playing a different game. But ultimately, most of the 6 and low to mid 7-figure businesses we've worked with, marketing budgets just tend to be a lot smaller because you have to spend more of your money on team and labor costs. So with offer delivery expenses, then offer delivery expenses can be higher. This gets into like bookkeeping and finance stuff. It depends on how you've set up your team. So for a lot of our clients at Evolve Finance that have marketing agencies, if they're still working with a lot of contractors and they're not employees, then offer delivery expenses might be really high, right? Because the definition of an agency is such that agencies go out and almost act as a middleman, where they find the contractors that are needed to serve you as the client and get your project done. Now, they might use a lot of the same contractors over and over again, but these aren't employees. They only give these people work when they have the projects to do the work, versus a firm is more so a service business with more full-time employees, where it's like the people delivering the service are actually part of the company, they're employees, and they're going to be managing a steady flow of work, versus agencies as work comes and goes. So do the contractors, at least to some degree. So if your agency is more contractor based, then you might have a lot of offer delivery expenses. But I typically like to see as many team costs under the labor category for service-based businesses because I think it's easier to see it all in one place. But I think it totally makes sense using the offer delivery pillar to track contractor expenses, especially if you have a marketing agency and you want to track your copywriter expenses and your web design expenses and your development expenses and your paid traffic manager expenses and track that all under offer delivery. I think that's totally acceptable, but obviously that's going to then be a big profit pillar for you and you really need to keep an eye on that pillar. Labor expenses are also going to be a big one. Again, if your team is mostly employees, then labor costs are really going to be high. But really, labor as a whole for a service-based business, you're going to have less operating, like operators. Usually the business owner has to kind of act as the operations manager until your business gets bigger. So really what it comes down to, whether you're tracking it in offer delivery or tracking it under the labor profit pillar, is what is it costing you to support the team that's doing the work for your clients. That's your single most important expense to manage. Because if the team that's serving your customers is costing you 80% of your revenue, then either you're not charging enough or you're paying your team too much or both, right? And so that's a really important number to understand. What percentage of your business's revenue is going to the team that's serving your customers? But under the labor category, you still may have an assistant. You may have an office manager. You might have some more back-end team members that aren't working directly with the clients, but are more helping you to operate the business behind the scenes. That's fine. But I tend to not worry about those people as much when I'm working with our clients. I'm more concerned with what are we paying the people that are actually delivering the service. And then the operating expenses side of things, that pillar, just like we talked about in the previous episode, it's the same stuff. Are you overspending on continuing education? Are you overspending on, like, if you maybe have an actual office space, what's your rent? Do you have rent costs? Do you have high utility costs? Are you traveling a bunch? Things like that. But operating expenses don't tend to be the make or break for service-based businesses unless they do have a physical office space. Otherwise, it's all labor. And if you run a service-based businesses, this is no surprise unless you're still at that stage where you're the only person serving your clients. And if that's the case, you will learn very quickly that team will be your biggest cost if you want to scale beyond just yourself. So that is ultimately the question with a service-based business. Do you want to scale beyond yourself? Again, for us, it was 100% worth it. I have no regrets, but it's hard. And I think that's why service-based businesses tend to be more valuable than course businesses, membership sites, coaching businesses, things like that. I'm not saying those businesses aren't hard to run, but those businesses tend to revolve on really strong lead and conversion strategies like lead generation, conversion activities, things like that, which tend to be harder to control. I know there's a lot of businesses out there that have great lead gen systems and scale and grow, but especially now, I'm recording this August 5th of 2025. If you're listening to this way down the line, I hope it's changed, but the economy's tough right now, and lead gen is pretty difficult to manage and to be successful at, especially for smaller online businesses. But for a service-based business, you don't have to spend as much time on the sales and marketing side. You obviously need to sell new clients in, but let me say that I guess the lead gen isn't quite as intense because a lot of that can happen organically over time, but you have to be really into systems and processes, SOPs, and financial modeling. You have to have good financial data so you can really map out what can we afford to pay the team, what do we need to charge in order to pay the team what they need to be paid, while also having a competitive price in the marketplace. It can be tricky, but it can also be, again, very stable, very consistent. I always say pick your bullshit when it comes to what business model do you want, because whatever business model you have, You're going to think someone else's business model is way better. Oh, it must be so much better to have a membership site or, whatever one sounds better to you. What I can tell you is they all have their bullshit. So pick the bullshit you want to deal with. And I really do think service-based businesses are underrated. But you have to build different skills, or maybe not fully different skills, but you have to build certain skills sooner in the development of your business than a more classic online business would have to develop. And you may never really have to develop that strong as sales and marketing skills, depending on how you generate your leads, but you have to be a phenomenal operator or have someone on your team that's a phenomenal operator eventually. And you have to know your numbers and you have to be aware of hiring decisions and the financial impacts of all those things, because the margins are a little smaller, not a lot, but you can still have an online service business doing 20-30% profitability, have a business that's going to be worth something to someone one day when you eventually want to sell it. And for me, that's more my cup of tea. It's not everyone's cup of tea, and that's fine, but service-based businesses are so underrated. So just because the profit margin might be a little smaller, if we're talking 20% instead of 30%, it doesn't mean they aren't phenomenal businesses to run. But that's all I got for you all today. I hope my service-based business owners appreciated this episode. If we can help with your service-based business to get a better handle on your numbers, please go check us out at evolvefinance.com. Check out our accounting services. And if you haven't read it or purchased it, check out our book, Profit Pillars. It's going to give you everything you need to know about how to really, really get a grasp of the financial side of your business, regardless of the accounting firm or financial support you currently have in your business. But as always, thank you for listening. Thank you for watching. See you in the next episode.